Welcome back to Power Lunch. It is time for Trading Nation. Take a look at General Electric today. Off session highs, but still up more than 8%, close to 9%. This after the company removed CEO John Flannery after a brief year in the role. Craig Johnson is with PiperJaffray. Boris Schlossberg is with BK Asset Management to try and assess the stock from here. Craig, you know, if you look at this chart from the last year or so, on the way from 32 down to 11, a lot of rallies along the way, yet it still was in a big downtrend. Any way to say the stock looks washed out and ready to bottom here?
You know, I don't think so at this point in time. When I look at this chart, I think the new CEO coming in is probably the right move for the company. But if you strip aside this change in management, the stock is still making a series of lower lows and lower highs, and really it's going to take a close above 15 to really make any sort of indication that a low has been set and that perhaps we're going to see some sort of trend change start to unfold. So from my perspective, it's too early to step up and buy this stock yet. And usually when you get a change of management like this, you get an initial reaction. And then if you go back and you'll see that stock usually corrects further before you find that ultimate low. And I suspect that'll probably be the template for GE too.
Boris, you know, aside from just the CEO change here, we got a big write-down of the power business. Obviously, we don't know if, in fact, the healthcare division is going to be separated as was planned. So how do you even go about trying to figure out the value of this company right now?
Well, you know, I think if you step back, you kind of have to understand that GE is in trouble not because the market hates its products. It's in trouble because it's over-leveraged and it made terrible, terrible acquisition deals. So it's really in trouble because of its trading rather than its business process. Mr. Culp, who's coming in, is actually very well known as both a guy who brings in very accretive kind of deals. So he's both a good trader and a very good manager. And I think the market is reacting very positively to that. That having been said, I am under no illusion. We could still have a dividend cut. We could still have, you know, a rights acquisition issue. We probably need some kind of a capital infusion into the company. So it's very likely they could still drift back down to 10. But I think on a 3 to 5 year time basis as an investor, it's an excellent opportunity because it is still a preeminent industrial giant.
All right. Well, 10 would get it not too far from those 2009 lows, amazingly enough. Thank you very much, guys. Appreciate it. For more Trading Nation, head to our website or follow us on Twitter @Trading Nation.
Volatile markets are a good time for longer-term investors to review their asset allocation plans on their core holdings. If you're overly concentrated in a specific stock or sector, volatility will probably do more damage to your portfolio. Diversified accounts generally fare far better when volatility increases.